Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 11th of April, 2019. Thanks for joining me yet again. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you can hear me nice and clear. Let's take a look real quick. All right. Where are you? Okay. This morning, looking at the overall performance, we do have risk on. We have a gap up in the S&Ps and in other indices. The leader this morning's Eurostox 50 up 39 basis points, 13 points. The DAX up 27.5 points or 0.23%. The dollar's up 13.5 cents, interestingly. And the laggards are all the safety assets: the euro, the U.S. bond, the 10-year note, the euro bond, the yen, and gold. Crude is also taking a bit of a hit on excess inventory yesterday, trading at 64.49, down 52 cents. Sorry, that's not correct. It's trading at 64.08, down 53 cents or 0.82%. So risk on sentiment this morning. Looking at the calendar, just a Fed parade again. We did get PPI this morning. PPI came in a lot higher. 0.3% was a consensus. 0.6% is what we got. This is the month-on-month figure. And then we have Fed speakers coming out one after the other this morning. At 9:30, we have Clarida. 9:35 Eastern, we have Fed's Williams. At 8:40, we have Fed's Bullard. And then at 4 p.m., we have Fed's Bowman. And then Fed Chair Powell to speak at some point. I don't have a time for that today. And then this evening at about 11 o'clock Eastern, 10 Central, we get the balance of trade, exports and imports year on year from China. So that's where we are. This morning we did get the inflation rate out of Germany. It's a high-tier figure, 1.3% consensus, and the actual came in line. Let's take a look at what we expected yesterday versus what we got. Today's kind of a good view on how things kind of shape up. Yesterday, the primary scenario was looking for a pullback. Let's switch pen back. Up. No, wrong color. Yes, right color. Expected for it to walk down into the 2884 area. You see it right here. 2884, looking for an impulse up, consolidate in the 2887, and then push to 2895, 94, 95 area as a top before it turns over. That's the primary scenario. Secondary, test up early, impulse down. That's a key thing. Consolidate and then start to work its way down into a lower high, lower low. I did talk yesterday about there's just a much higher probability of this turning around and putting in a higher low, higher high. Here's what actually happened. Right on the dot. Let's turn some of this stuff off. So right on the dot, we instead of walking down and then pushing up, it did push up a little bit, but we do have the same lines. It did end up testing that 84, 83 area. And then started to walk higher. We took out the IB high. We went and closed this naked point of control from 2 days ago, consolidated, and where did it end up? It ended up in the 94, 95 area. This is the impulse I was looking for way back here. I was looking for a test, but it's not for me to dictate what the market should do and therefore be disappointed when it doesn't do it. It's just when we do see when we do see that part of the plan start to play out, that's when we push the gas. And so overall, It ended up finishing well, but there was just a ton of chop here inside of the initial balance for most of the day. The profile was relatively balanced most of the session. It basically looked like this, and then it extended and created a secondary node, high volume node up top, and it looks like coming into the close. I'm sure those of you who've been watching a while can guess that the close signals that the market is not done auctioning to the upside. Remember, the market continues to look at higher prices, to advertise higher prices, to look for what? The whole point of exploring higher prices is to find those sellers. The whole point of exploring lower prices is to find those buyers. It's the opposite of how people generally see the market or are taught how the market moves. But that's the core principle of the auction, is that the market will just keep looking for those sellers, and until it finds those sellers, it'll keep going up. And that's why we always look for excess highs or excess lows, because when sellers come back in and they mean business, we move away from that price very quickly. Okay, but if we end up pushing up and holding that price, well, we haven't really found sellers. We're just resting, and we call that a weak high. Many people call that a double, a triple, quadruple top. To me, that's a weak high, and it's likely to get taken out, and it's taken out a high probability of the time if you go and test it. And so yesterday, if you look at this high, it's clearly telling us that the auction is incomplete, that the market basically ran out of time, did not find sellers. How do I know it did not find sellers? Because they didn't come in and push lower. We did not find somebody who's intending to sell for it to push lower into the close. We ended up closing almost at the top tick. So we expect this to push higher and continue on to 2,900. Which it basically did. I believe the overnight, let me put this up front. Yeah, the overnight high is 2,900. Again, there was still liquidity there. You could see it on this chart. You can see this liquidity right here. It just sits there. I mean, this is a century figure, so it's going to have a lot of liquidity there, and we hit it and came back off just like we did on Monday. So that's basically what we had yesterday. Again, this was scenario 1, a low of 84-ish, a high of 95-ish, and this is actual, a low of 83.25 and a high of 95. Okay, so that worked out pretty good. There was not much to do. In this market, I'm finding that you just have to be a sniper. You have to lay there and just watch and look at the action and be bored to death until you see the thing that triggers your plan. You have to be very, very disciplined in this sort of environment. So that's what we had yesterday. Looking at the overnight, and what it has done is, as you can see, immediately starts to move up, and there's your excess high. This is what it looks like when we find sellers. That's the first test at 2,900. We've got a double top now. We've got 2 tests at 2,900, but that's basically what it looks like when sellers step in. Okay, we get the seller, we push back 8 points, consolidate under the mid. Test the mid. Remember, the mid is this blue line right here. That's the high plus the low of the session divided by 2. And then we get the continuation. So impulse, pullback, continuation trade. And now this is a correction. So this is an impulse the other way. This is a pullback, expecting continuation through 2,900. 2,904 is the next big area up. Okay. It's not likely to pull back very much this morning, in my opinion. With a weak high like this, with a double top, now a triple top. Remember? Boom, boom, and boom. This is a weak high. So the next run up is likely to give us a pretty decent sized spike through there. Decent size these days is 12 to 16 ticks. It's just 4 points, but that's what's expected. So that's that. We went through the events. We went through what has happened. So now let's look at what we're expecting for today. For those of you who thinks this chart's noisy, it's just because it's got my stock zones on it and it's got the day levels. These levels are day levels. There's a high, the prior day's high, prior day's close. The yellow are the initial balance for the session. The green dots are the open for the session, and the green down here is the low. And then these reddish maroonish lines are an extension of the most traded price of the session, called VPOC, the volume point of control, and it extends out until we close it. We generally tend to close those. Okay, so in case you think this is a little bit noisy, it's not. Once you look at the pieces, it's not. Yes, the price and volume is key here, and I'm paying attention to that. But I do have those references, mainly because I'm a day trader. So, what are we looking for today? Today, looking for an open auction that reverts back into the 95, pokes through, tests, looking for an impulse up, consolidate, and I'm looking for a spike through to 29.03, 29.04, consolidate, pull back to 29.01 or so. So, expecting that to be the cutoff. And then looking for this to start walking its way up. As we push through 2,900, we're likely to get some follow through here. So just be cautious trading around a century figure, 2,900. Trading around that is going to be very, very choppy. I suggest you don't get yourself involved or initiate a new trade in that area. Of course, just manage a trade that you have. Otherwise, I'm looking for an open auction that pushes into the 2,900, spikes through, gets into 29.03, drifts back down to 2,900, and comes back in, and then just consolidates and builds a point of control right around this 2,900. So we end up with a profile that's pretty fat right in the middle here. That would be scenario 2. Because we're out of range, you need to look at scenario 3 and 4, and that's an open test drive up. So remember, this is the action's been pretty bullish, especially into yesterday's close. Open, test, drive, and then this turns into a potentially strong trend day up. Expect 29.10, 29.12 in that scenario. 29.12 for tomorrow's review. Okay, so those are the 3 key scenarios and why. We reviewed what have we done this morning. We've reviewed what we expected yesterday. We've looked at what actually happened. We've looked at what has happened in the overnight session to build our contextual story. And then we've looked at what are the most likely scenarios and why. And it's now all about execution. It's about looking at waiting for the market to show what areas are likely to slow down and present resistance or support, and then to look at which plan that correlates to put the trade on, set your stops, and then let go of the mouse and let the market do what it's got to do. That's trading in a nutshell. Good luck today, and I'll catch you tomorrow. Take care.